All right, this is portfolio update for December 2, 2022. And everything is starting to turn up. So that's a really good thing. Starting to make some money on some options to sell out of some positions. Let's go through them real quick. So still don't have a position in the consumer cyclical sector. Genuine Parts Company, still, out of our price range. Rogers is down about 7%. So again, it was down low enough for us to purchase more shares, which I really wanted to do, but we didn't have the cash at the time. And now the price has gone up too far for us to purchase shares. So long-term holding for us, 5% of the portfolio, doing really, really well. Basically just kicking back and sending us those dividends every quarter. ENB is our energy sector company, natural gas, roughly 13% of the portfolio. As you can see, it's down about 6 or 7%. So again, just kind of holding on to it, sending us those nice dividends. Coca-Cola, this one is down 3%, but we are getting close to being able to start selling some options on this position to put some cash in our pockets. And the idea is to sell it at a profit at around $72. The last time I checked, there weren't any near-term options available at that $72 price range, but we're getting there. So I'm going to continue to monitor that. And then once the options get to be about, I don't know, $20, $30, then I'll go ahead and start selling those. All right, Merck, doing really well for us. One of our smallest positions in the portfolio, less than 2%, but we're currently up about 40% on this particular name. The program calls for 15 shares. We have 15 shares, and so I think we're just going to hold on to this unless there is something just that really stands out in that health sector. We're going to stay in Merck and just continue to collect those dividends. All right, Paychex. We are currently down about 11% in this position. We do have a buy signal, but I don't know if it's a good idea to spend that cash right now. So I'm going to kind of wait on this one and just see where everything goes. But for the most part, doing well. And, it's a very small position for us too. So, all right, Southern Copper. We do have a sales signal on this one. We're up about 17% on this name. We did sell some options to sell this position on last month. The options were only $15, but we will look to continue selling options against this position to sell it at a profit. We profit on this at like 57, and the price is currently about 59. So technically, we can sell an option and make quite a bit of money on that $57, $59 price target. But I want to try to get as much money as possible. So looking to sell options at $60, $61, $62, somewhere in there. It'll still put a nice piece of cash in our pocket. And if we do sell it, we'll sell it at a much greater profit. All right, Regions Financial, one of our largest holdings, 23% currently. Down again this month, 17%. But if you recall from last month, down 17 is much higher than what it was. So this position is doing really well for us. It is down, but we do expect it to come back, right? Currently, the program is only calling for 78 shares. We have 600 shares, so we are far, far outweighted in this position. So definitely want to unload this as quickly as we can. But we don't want to take a loss, not right now anyway. So I think right now the price is somewhere around $22, $23. Once it gets closer to that $25 price target, even if we do take a little bit of a loss on it, I think it'll be worth it just to put some cash in our pockets and get back to balance. Because like I say, right now we're way out of balance. All right. Corning, we are currently down about 14%. 12% of our portfolio. We don't quite have an option to sell on this one. So just kind of holding on to it. Again, outsized position, so we're not going to add any shares at this point. Just going to continue to monitor it. And if we do need to sell out or something like that, I'll definitely do an analysis on it before doing so. All right, Medical Properties Trust. Program calling for 545 shares. We currently have 500, so that's about even. We're about balanced on that one. This one is our worst performing position right now, down almost 40%. We're currently in at about $18, $19, and the price is somewhere around $12 right now. So, the last analysis I did says that we're in a good place. I'll continue to do those analyses. I think the next quarter is due next month, I think. So I'll definitely do another analysis just to make sure that we're still in line and everything is okay. And of course, if we find that, the stock price or the fundamentals are not where we need them to be, we definitely will sell out of this position at a loss, ideally through options. But again, right now, that's not going to happen. All right, ETR is our utility. We're currently up on this name about 12%. It's only 3% of our portfolio. The program is calling for 56 shares. We currently have 20. When we have a sell signal like this, unless there is some other company in the utility sector that is just a screaming buy, then we're going to stay with our utility where we are. We don't really have the shares to get rid of because, like I said, the program wants us to have 56 and we only have 20. So I think we're just going to stay here. Like I said, unless there's some other company in the utility sector that is just screaming for us to buy it. I do want to quickly take a look at our performance this month. We are currently at 3.23%, and we are halfway through the year. So I'm happy with that. I'm pretty sure, without a doubt, we are beating our benchmark, which is the Dow, which is still currently down, I believe, for the year. So we're beating our benchmark. What happens the rest of the year, I'm not sure. We definitely have some positions that we can sell for a profit to increase this number. But just sitting back right now, collecting those dividends, selling options whenever we can, is doing okay for us. Last year, we ended the year at 10%. Based on where we are now, I don't know if we'll get to that 10% rate this year, but I do expect to be higher than 3 by year end. Let's take a quick look at our, what I'll call our money performance right now. So this is kind of just a scatter chart of what our returns have been month to month. And as you can see, most of our returns have been right around this line right here, right around this 0 line. And what that means is cash preservation. It means that every month we're not losing money and we're not making a whole lot of money. And that is the definition of risk, right? Risk equals return and loss, right? And so the higher the risk, the higher the return, the higher the loss. The lower the risk, the lower the return, the lower the loss. And so this portfolio is geared towards low risk. But it is important to see that our gains up here at the top far outweigh our losses. So you see our largest loss ever was in January of 2019, and it was less than 10%. Our largest gain, however, was in March of 2017 with a gain of 12%. So our gains are larger than our losses. And of course, that's what you want to see. And then, like I said, for the most part, month after month, our money stays about the same. And as you can see, we do see some up days or up months rather here more recently. And so that's really good. We're going to continue in that way. All right. So the money is kind of ticking down a bit. I think we were up to almost $400 at one point a month, and now it's down to $363. So not awesome, but not horrible either. Overall, for the last 7 years, we're sitting at $200 a month, which that's not bad. You know, that's a light bill for sure, right? 7.73 annual return for the total 7 years. Currently, this past year, we're sitting at 7%. Over the last 3 years, we're almost at 10%. So I'm happy with those numbers. I really am. Definitely want to see about getting this back to that 400. But I know that in order to do that, we're going to have to sell out of our positions that have a profit for us. And I know that that's coming, but I am being very patient in how we're doing that. Like I said, unless there is something that it's just like we have to buy it now, I don't want to make any sudden moves. Let's see what else. I don't remember exactly what our risk was last month. I have to go back and look at it, but I think it's coming down some. I think it's coming down. So this 1% is literally going to be like a 1% up or down month to month, right? So either we're going to lose 1% or we're going to gain 1%. And, you know, the thing is like I said, low risk equals low return and low loss. And so in an environment where we know that the market is not doing great, that low risk is awesome. It's a nice safety net to know that you're not going to lose a lot of money. But at the same time, when the market is turning up like it's doing right now, you want to see some of that risk, right? You want to see some of those outsized gains month to month. So we see over the last 3 years, it was a 174, and overall, 7 years is 2%. And so that's literally double what it has been over the last 12 months. And so I definitely want to start to see this 12-month number tick up a little bit, just to show that, you know, we're actually making some extra change to try to get these numbers up to where they were before at that $400 mark.